Well, welcome to my show. I know you've been a long time viewer and fan. Okay, well, in today's episode, we have Kyle Chasse, founder and CEO of several companies, actually, most notably Master Ventures, Paid, Ignition, Fluid, Commonwealth, and I believe there's more in the works.
Yeah.
But I will let you introduce yourself, perhaps just like a quick high-level introduction on who you are, why you got into Bitcoin.
Yeah, so I've always been someone who was like driven by what I was passionate about and interested in, and so I usually would find myself just kind of learning about different things and then going down rabbit holes, and then trying to figure out, after I became like very interested in a topic, how to monetize that thing, to build a business around it. So before Bitcoin and crypto, I was in regenerative medicine, anti-aging, longevity, and I had built businesses around that. And then by 2012 is when I first started getting Bitcoin, but by 2013 is when I really went down rabbit hole and like became obsessed with that idea of how it could be super powerful, and ended up selling my company called Reverse Aging Institute and buying Bitcoin with that in 2013. And the big aha moment was when Julian Assange and WikiLeaks, when I found out that they were using Bitcoin to accept donations for the work that they were doing, because what they were doing was, for those of you who don't know, is leaking all these classified government documents. And so the way that normally that would work is like with traditional payment methods like PayPal and credit cards, Western Union, banks, they all stopped allowing payments to WikiLeaks for donations, so they couldn't continue to do their job. They tried to choke them out so that they couldn't afford all of these people who were helping them out to pay them to responsibly leak these documents, because these documents had a lot of sensitive data in there, and they're trying to protect the people who maybe were still in business, spies and things like that, trying to make sure that they weren't putting people's lives in danger, but still, so that took a huge workforce. And so the government put pressure on all the payment gateways to stop allowing donations, and then they had no way to accept money, and so they started accepting Bitcoin and can continue operations. And I thought that was really powerful, and that was like, wow, this is going to be big someday. So then I wanted to be part of that, because I always wanted to be part of something that was going to allow our world to kind of progress beyond like centralized control of everything. So that's when I started getting into Bitcoin and started playing around. So I'm building the world's first lottery, World Super Lotto, and then the rest was after that. So I've done a bunch of different things, been in this space for almost 12 years now. It'll be 12 years in April, and what else do you want to know?
The rest is history. Yeah, no, so that's very interesting. Thank you for sharing. I do want to hear your perspective on the recent ETFs approvals launch, what everyone is kind of calling like a giant belly flop, which I've covered on my channel. But first, I'd like to hear more about what you're building. So I mentioned some of these names, right? So we have Paid, Ignition. Ignition, for those of you who don't know, was one of the top 3 launchpads this last bull run. And I know, because I'm an insider, that Ignition is planning a lot of innovations. Maybe, and I know I heard your AMA. I know I shared it with my community, my growing community. Maybe you can share more on what you're building, like what's exciting about Ignition, or what should our audience know about?
So I think like some of our specialty is opportunity. It's deal flow. You know, a lot of people in cryptocurrency and blockchain are building a lot of different things. Some are building games, some are building infrastructure, some are building different types of products that challenge things that the banks offer, like borrowing and lending, things like that. since I've been in the space for a very long time and am very well connected, and because I also have a fairly large social presence and a good venture capital VC deal network, deal flow and opportunity come to us a lot. So one of the things that I was very grateful for in my early days of investing in cryptocurrency was opportunity to get access into good deals. So I've been fortunate enough to invest in things like Coinbase, which is now a publicly traded company, which that investment did very, very, very well. I've invested into Ripple, and Ripple is about to do IPO this in 2024 likely. I invested in Kraken, which is going to IPO in 2024. I invested in Circle, which is going to IPO in 2024. Abra, so Securitize, which these things are all now unicorn companies, and I was able to access these things in the early days through a platform called Bank to the Future. And this is by a guy called Simon Dixon, who was one of the first people to publish a book about Bitcoin, I think back in 2011. And so I was very grateful for that opportunity. On that platform, you need to be an accredited investor if you're from the United States, and it's just not accessible for most people. So what we wanted to do, so the thesis of at least two of the products that we're building, Commonwealth and Paid, are about giving that same type of early access to everybody, to anybody and everybody in the world, whether you want to invest $5 into something or $100,000. And so both Commonwealth serve that purpose in different ways, where Commonwealth acts more like a traditional fund. And for those who aren't really familiar with fund structures, it's basically, you've got a team of sophisticated analysts and smart people who their whole goal is you give them money, and later they hopefully turn your money into 2 to 10x times it, and then they give that back, and then they take a fee out for their success, for their work. So that is the traditional fund structure is like a put your money into a fund, it's invested, and 8 to 10 years later you get it back with hopefully a nice multiple, hopefully much more than you'd get in the stock market or something. Now, it's an easy structure to understand. It's a very good funds produce good revenue, good returns for their investors, and it works really well. It's simple. The problem is that it's a high barrier of entry. So usually with good funds, especially in the crypto space, in any space actually, usually the minimum investment is somewhere between $250,000 to $2 million, which is not affordable for most of the world. So, so Commonwealth wanted to take a very similar, familiar structure and make that available to everybody in a much easier way to do it. So it's kind of like, in a way, almost, and both Paid and Commonwealth focus on companies that are on the private market still, not traded publicly yet. So before you buy them, before they're trading on the exchanges. Commonwealth is usually focused earlier stage, so it follows that traditional fund structure. It's managed for you essentially. So it's very, very good for people who want exposure to crypto, want to minimize their risk, because you have, and I won't go into the detail of how Commonwealth works, but essentially we have several kinds of checks and balances and a sophisticated set of chosen people who are allowed to bring deals into these funds that have successful track records. And so they're already doing due diligence. They've already done all the work for the people. And so you have, it's just, the risk is highly mitigated in something like Commonwealth. And so it's kind of something you can set and forget if you're if you want just some exposure, but you don't want to take a lot of time to learn about crypto and you just want another way to diversify. Paid is typically focus on a little bit later stage into the life cycle of a company's path to publicly traded, which means that typically you're investing at a little bit higher valuation, which means it's a little bit more expensive. But the difference is that it's more self-managed, where you have an opportunity to invest into this company before it's traded, but instead of the protocol managing all of the tokens for you, you're buying the tokens and then you get them, and then it's on your responsibility to sell them when you want them, when you want to, right? So you can choose to sell them right away or hold on to them if you're bullish on the project long term. And so those are the two products that right now are essentially already paid 2.0. Like we already did that announcement of how it works, and the first launch is coming at the end of the month, and then Commonwealth should be launching at the end of February. So
Got it.
yeah.
Awesome, thanks. And so for paid, for those that want to get involved in this first sale and take advantage, what should they do? Is there a recommendation? I know you said there's no barrier to entry, or it's open to everybody. But for paid, which I understand, I was actually part of the original team, how many paid tokens are they required to hold to get involved?
Yeah, so you don't have to have any paid tokens, and that's kind of the interesting thing about it. Where there's a lot to explain here to an audience that maybe
I will
isn't in
link your
crypto.
video below.
But basically, like, the nice thing is that typically, so paid is what we call a launchpad in the crypto world, and so we've redesigned the model to where last bull run we had these different tiers where you would have to buy paid tokens, stake them for a period of time, and then you'd get entered into a lottery to get a chance to invest in these projects. That required, and because there's many different launchpads, it requires people to kind of make a decision. If they've got limited amount of money to invest, they have to kind of pick a launchpad, commit to that launchpad as far as hoping that that team can produce good projects, invest in that launchpad token, stake those, which costs money, and then they would invest in the deals that come to that launchpad. And if you're very wealthy, you can enter launchpad tokens and enter all of them, and then you get more opportunity, more diversity. But for us now, we wanted to make it so that we wanted to kind of, where every other launchpad has this tribalism, where it's like us versus them.
Yeah.
There's many other top launchpads out there, like DAOmaker or Seedify, or
Let's not mention them.
it's fine. Like the nice thing is that we don't have to compete with them, because they might compete with each other, because they're trying to say our deals are better than your deals, so therefore you should buy our tokens, get in our tiers, and try to be in our deals. And the other guy's saying, no, our deals are better than yours. We're over here saying, you guys can fight over there, and then we're just going to offer the deals that we do, and your community is welcome always to come participate in our deals. Mm-hmm. Now, so this is, again, quite a lot to understand, and linking the video will help people understand, but in the token world, you want to create a business model where value is created and captured. And so in those other models, I believe that it's quite limited to how much value can be created when you have essentially a cap on the amount of money that you can raise and the amount of money and the amount of people that can participate. Because the problem with these tier models is that as the price of the token increases, but it still takes X amount of tokens always to get into these tiers, that means that the cost of entry into these tiers gets higher and higher as there's more demand and then the bull run kicks in.
Right.
And so it has a saturation point, essentially, of how much it can scale. Mm-hmm. When we remove all that, and all of a sudden you allow people from all over the world to participate, and if they only, I use this example a lot, like, think about all the people in third world countries who only have $5 to invest, and there must be millions of people who are interested in crypto from India and South America and all the third world countries. but before they never had the possibility to invest. And in a bull market, $5 can easily turn into $5,000, or $500 easily. And then they can take that $500 and put in the next one, and that 500 turns into 2,500, and so that wasn't feasible before. So for us, as a business model, you want to be able to, we're creating fees, and that those fees are being used back through the economy, but the fees essentially are being generated from the amount of money that we're able to raise. And so if we can raise, if you have a good project and they want to raise, I think in the bull run, so to give you some comparison, last bull run, even though we were doing a launch every day for the whole bull run, I think we only raised in total like $35 million for all the projects combined. This bull run, we want to aim for raises for each project, that between, on the low end, $1 million, but if it's a good project that needs it, it's a AAA project, amazing team, $50 to $100 million in one raise. And so if we're charging fees on that, think about over the course of the entire bull run, how much money we might be raising through this platform, and then how much value that creates within that ecosystem. So anyway, it's getting a little bit, I think, technical, but just want to say that it's just really more all-inclusive and less barrier of entry and more democratized for people to access. So 2 projects are it's really about giving access to people who didn't have access before.
Got it. I will link your video below so that it goes into more granular detail for those that want to know. But thank you for the explanation. This leads me to my next question, because as you would know, or don't know if you haven't been following, my channel is mainly oriented towards new people, that want to learn about crypto, they want to invest, they want to change their lives. What advice would you give in terms of like how much? So say someone has $1,000 to invest in crypto. How do they know how much to put into a project like Paid or Ignition, right? Like how much should they set aside for a project or investment opportunity like that, which really comparably could almost be like, I'm not saying it's like a mutual fund where there's a bunch of companies inside of one fund, right? That's the wrong language. But in
Commonwealth is more like that.
Commonwealth is more like that. But Paid, in a way, I know it's a launch pad that launches companies, right, into the market. But by investing in Paid and entering into these opportunities for these launches, right, to have an opportunity to buy into them before the company goes public, which allows you to buy at a cheap price, right? And then once it launches, what happens? Tokens pump. Then that's when people have the opportunity to like take out some profits, right, as the price goes up, pay themselves back at least. But considering Paid is going to be launching projects like 3-4 a week, and all throughout the bull run, which we know historically is 2 years, maybe a little like 3 years. That's
I'd say we have 12 to 18 months from now, so left.
Well, okay, so no one really knows, but sure, if anyone does, you probably have a better idea. Okay, say for the next 12 months. Considering that holding Paid will allow you to get into all of these many and multiple sales, in a way it's like a basket, right? It's like this potential opportunity that people have to invest in to one token that'll give them access to all of these tokens, right? And all of that potential to make money as their prices rise, they can take money out. So considering it represents such a massive opportunity, and then we have Commonwealth, that's like a fund, as you said, right? That's managed by these top crypto VCs and funds, that in the crypto space that are qualified, they have track records, as you said. So they're bringing in all their deal flow to Commonwealth, and they're going to be managing it, right? That's basically what I'm understanding.
Kind of.
Okay, so considering both of these, both represent massive value and technically like a bucket of massive value, this would not be the same as investing in like Doge or 9cat, this other meme, or investing in, PopCat or Analos, or, like there's different types of tokens in the market, right? There's stable coins for our audience that doesn't know. It's like the dollar, like USDT, USDC, like all of these, right? So you have like these stable tokens, which is where you grab your money that you make off of all these like newly launched tokens, right? They give you all this opportunity to earn so much money. Here's our baby. Oh, he
Hi,
wants
buddy.
to be a star. Come, Papa. Are you going to tell us all about cryptos? You're going to show everybody your Bitcoins? You're not supposed to show people your Bitcoin. Okay. This is Ruby, the mastermind. Good boy, Papa. We're recording. Okay. Oh. Okay, never mind. Anyway, back to what I'm getting at, which is what advice would you give to somebody who's new in crypto? They're sitting on $1,000. How could you best explain the investment opportunities that are coming to them in this bull run and how to allocate, say, this $1,000? Like, what would you do if you had $1,000? Like, where would you be putting your money and how would you divide it up?
Yes, if you're new, it's really, it depends on how much time you want to take to learn, because it's a very, very tricky market.
Yeah.
And there's so much to learn about how everything works. And it usually takes a couple years to really kind of understand what's going on. That's why we created something like Commonwealth. And so Commonwealth is good if someone wants to be passively involved, right?
Okay.
Not actively involved. Commonwealth is great. Like, if you, let's say that somebody has a job, right, and they're making X amount per year, and let's say that 20% of their monthly paycheck they have to invest in something. Commonwealth will oftentimes throughout this bull run, they will have multiple fund opportunities that open up. And so if you want to be passively involved and you don't want to like stress too much about the price of tokens, because it's very stressful, especially for new people. They invest in something, the next day it's down 10% and they think, oh my God,
I know.
10% down. And if they have experience with the stock market, like 10% is almost catastrophic in the stock market. In crypto, it's just another day.
Yeah.
It's like very common. So Commonwealth is good for something like that. So like if you have like 20% of your paycheck is investable, whenever Commonwealth has a new fund that opens up, if it's once every 3 or 4 months, then whenever it does, you can just go put your money in that fund, and then you can observe through the dashboard and the interface how it's doing, how it's performing. And the nice thing about Commonwealth is that you also have an opportunity to take some profits in a different way. So basically, like, you can sell a portion of your investment into that fund, and if the fund is doing really well, there's going to be people on the secondary market who want to buy that portion of your fund. And so, if you invest, $100 into it, and then a few months later, that fund is doing really well, maybe you can sell half of your position in that fund for $200, and now you already made 2x your money, and you still have 50% of that initial investment in the fund that could perform really well. And then paid is another great way from the Launchpad perspective. Typically, and because paid doesn't have, if you don't have a lot of money to invest, paid will be great because you won't have to buy paid tokens to participate. You can just invest that. The question is, like, would you want to buy, and this is where it takes more sophistication to understand, you could just invest in the things that are launching on paid, or you can buy, if you want exposure to kind of the success of paid as a launchpad, then you buy the paid token, right? Like, because the whole economy works together, and that works with the paid. So if you wanted to bet on an ecosystem, for example, of like all of the paid launches, then you can just hold paid token, right? And that's a representation of the overall success of everything that launches in paid. Plus, if you stake paid tokens, if you buy them, stake them, you get an airdrop of almost all the projects that launch. So you're getting free tokens just by staking your paid. So you don't even have to spend anything. You just buy paid, stake them, and then you'll get some free tokens from everything that launches dropped to you. So that's a good way to participate and also get exposure to everything that launches without having to put your own money into it. So you can do a little bit of all of the above too. And then if you just want to, and if you want to play around a little bit with trying to test things out on yourself, then you participate in the paid launches. And if you don't have a lot of money, if you only have $1,000, just try $20 in the first one and see how it goes, and learn a little bit. Be patient, because we have a long time and we haven't even got into the frothy, euphoric part. Right now we're in this kind of things where people seem uncertain, and we can get into the ETF after this, but we will get into the point of the market where things start to explode, where people can't even believe the kinds of returns, where it gets irrationally exciting. It's like crazy kinds of gains are being made that people think are going to go on forever, and they eventually don't. But I would say that if someone wants to dabble and be a little bit more proactive in the space, not just passively involved, but actively involved, then dabbling on a launchpad like Paid would make a lot of sense for them.
Got it. Thank you for that. And I will add that following Kyle's channel will put you pretty much at the forefront of what's happening and what the next newest and best tokens are. He has a whole research team that helps him stay, super plugged in and just know what's happening. So I would advise and recommend our audience to go follow his channel. But I will say that, if you have questions and you don't understand some of the terminology that he's using, to come back to my channel and my Telegram community to ask these questions, So exciting times. All right, so this leads us to the ETF. I've covered the ETF as much as possible on my channel, but you've been in the space since 2012, as you've said. So I imagine, your perspective is just, just on a grander scheme, right? You can see the big picture. So anyway, maybe you could share just what's your sentiment? We know that the market all freaked out. It wasn't what they thought. They thought Bitcoin was going to pump like crazy. Your video yesterday, by the time this is released, maybe it's 2 days ago, you were cracking, I was cracking up listening to your video. You were sharing some posts or tweets from people. They were highly disappointed. Where's the airdrop? Or
exactly.
It just shows you the space where we're at, people's general lack of understanding, which I'm not going to hate on anybody, because honestly, this is a journey. I'm learning so much more by even starting to cover the news. So you don't really learn. It doesn't really sink in until you have to share it, right? And explain to somebody else. So that said, I'm not making fun of anyone that's been confused about what's been going on with the ETF. But maybe you can explain, based on the market sentiment, the crypto community sentiment, what do you have to say to everybody about that's confused, feels like, it was a rug, they don't see the value in it. What is the actual value, and what would you like to tell everybody, regarding its actual value, its actual impact, and why it matters to them?
So the ETF has been a long 10 years in the making process, right? The Winklevi brothers, Cameron and Tyler Winklevoss, from the guys who...
What is it? Social...
The Social Network, the movie, the guys who gave Mark Zuckerberg the idea and he ran with it. They applied for a Bitcoin ETF 10 years ago. And the funny thing is today they still don't have one. So,
It's not funny.
but this has been something that for a couple of years, we've all been anticipating, and so it's been a big event, and that the news when BlackRock filed for an ETF, I think back in June 15th, I think it was, brought us in the market from, I think, around $25,000 to where we are now at $42,000, and then when the ETF did get approved, we had a short-term pump to $48,000 or something like that, and now it's back to $42,000. Everyone thinks that it was a sell the news event. It's not a sell the news event. that just means a sell the news event just means like basically a lot of people are excited, expecting something to happen, and so there's a lot of excitement and speculation, which drives price up. And then when the actual event happens, there's nothing to look forward to anymore, and so then people like take profits and exit, and that's it. But so there was so basically people were wondering, like, was the ETF priced in? Was all the price run up from 25,000 to, I think, we're 43,000, 44,000 where it was when it got announced? Was that price, like, was that going to be the effect that the ETF has in the market? And for everybody who was in crypto before, it was priced in because we were all expecting it to happen. So we were buying as much Bitcoin as we were feeling comfortable with. But for the rest of the world, it's not priced in because they only a few days ago were able to start buying Bitcoin on an institutional level. And the biggest effect on the negative price action is that Grayscale converted their GBTC trust, which was a one-way bridge essentially, which allowed people to have exposure to Bitcoin, but weren't allowed to sell it. They weren't allowed to exit the position, and it wasn't a spot ETF, which meant that they could redeem their shares of a trust for cash or exit the position. So Grayscale had $20 billion in their trust of Bitcoin exposure, and that's been around for a long time. A lot of people in that trust are up massively from the time that they entered. They've never had an opportunity to take profits. Finally, the conversion allowed their shares to be sold, and so it's just a lot of people that have been wanting to take profits. They want to buy a home, they want to go on vacation, they want to retire, whatever, they finally were able to do that. So we saw a lot of sell-offs happening from the GBTC trust. But while those sell-offs are happening, you're still getting, if you look at the data, you're getting massive inflows. I think for the first 2 days, I think there was something like 71,000 Bitcoin inflow into BlackRock's ETF, and that was only, I saw some stats. I think in the first 2 days of the ETF trading, there was 9 times more Bitcoin bought up than is produced every day. So the Bitcoin, every 10 minutes, there's new Bitcoin created, and in April that number gets cut in half. I think right now it's 12 and a half, and then it gets cut to 6, I think. And so I think every day is 900 new Bitcoin creators, something like that. I don't remember the number exactly, but anyway, there was 9 times more bought up in the first 2 days than there was produced, and that production number is about to get cut in half. So if that's the same, if we get the same pace, that means there's 18, in April there'll be 18 times more bought up than are actually being newly created, which means that the actual circulating supply is going to get eaten up very, very quickly. So if you're looking at short-term price action, the ETF seems disappointing. If you understand what's really going on, and also if you look at the home page, the front page of all of the biggest, except for Vanguard, but the biggest financial managers in the world, BlackRock, which has, I think the numbers are always different, between $9 and $12 trillion under management. You've got Fidelity, you've got Van Eck, you've got Galaxy, Invesco, WisdomTree, you've got ARK, all of these guys that are managing in aggregate trillions and trillions and trillions, tens of trillions of dollars. On their homepage, when you go to BlackRock.com, the first thing that pops up is advertising their Bitcoin, Bitcoin trust to you. And they've all now they've all been making commercials for mainstream TV. So when you're boomers, the rich people that are sitting home, or anybody who has a brokerage account, who uses these guys to manage their money, now they haven't been paying attention to crypto. They just don't care. They haven't been caring. But now when they're at home and they're watching Wheel of Fortune or CNN or something, and the commercials come on TV, they're gonna see commercials, and if you get 8 commercials in between, a commercial break in between your news or your favorite sitcom or whatever, probably 2 of those commercials are gonna be Bitcoin commercials from competing fund managers, and then these guys are gonna be going, what the fuck? Bitcoin's on, I can now go buy this thing, and they're going to get a call from the person who manages their money at these companies and say, hey, you may have seen our commercials lately. I don't know if you know, but we now have Bitcoin as an available option for you to get exposure to. And a lot of people who literally just haven't cared, because only of us who live in this echo chamber of crypto actually care, but they're going to be like, oh, Bitcoin, I thought that was a scam. And this guy's going to get on the phone very calmly and be like, no, actually, let me just tell you, like, it's actually now, we're actually taking it very seriously, and then they'll start giving some statistics for the
past 10 years outperformed every other asset class on the planet. It's a very scarce asset. It's the most scarce asset on the planet, essentially. And our thesis is that it's going to, continue to appreciate in value over the coming, next 20 years. We think it's a very good idea that, conservatively, we take, between 1% to 5% of the money that's managed for you and put that into the Bitcoin ETF. What do you think? And these guys have the best sales teams and sales force on the planet. And it's really not a hard thing to sell, I think. And so the thing is that there's 300,000 registered financial advisors in America. These guys all right now have the opportunity to sell a new asset class. Before, you're selling the same stuff over and over again. You're selling top 500 stocks, you're selling gold, you're selling boring things that have always been around. It's like, there was a really good movie, I forget what it was called, but it was all about the invention of Viagra, and how like the sales, the guys who would sell drugs, all the doctors, it was like the most exciting thing for them ever, because like all the other drugs, like, oh, do you want another thing for your blood pressure? Do you want another thing for your diabetes?
Imagine them selling it when they get sick.
But all of a sudden they had a new exciting product that was like exciting for everybody, and so it's just like, and like they were able to, because everybody wanted it, you know what I mean? It's like, and so it was new, exciting, and something completely different. So yeah, it's a new exciting product. And so the end result is that what people don't realize is there's something called inflows. And inflows are going to be, we're not talking about the next 6 months or 12 months. We're talking about for the next 10 to 20 years of consistent allocation across pension funds that manage, every pension fund manages tens of billions of dollars for retirement people, for, 401ks. Every major fund now in the world is going to want to have exposure to this asset class. And you have someone like Larry Fink, who runs the biggest asset management company in the world, all over TV right now, being the biggest public spokesperson for not only Bitcoin, but also crypto. And so Bitcoin has just taken its graduation from a questionable asset class to a legitimate asset class that very few people are questioning anymore. Some people who still don't get it are making dumb tweets, and they're trying to understand. But now it's graduated into a serious asset class where you're going to have constant institutional buy pressure for the entire future. And so this is going to, I think a lot of people expected this to instantly send Bitcoin to $100,000. So this is what will allow Bitcoin to go to $100,000, right? It would have, without this ETF, it would have probably happened, but there's only so much money that retail, well, people like you and me, could actually afford to put into Bitcoin, whereas someone like BlackRock could come in 1 year, double, triple the size of the Bitcoin market cap from every individual who, like, watching this, so like you and me, who was able to buy. So there's much more buying power, and it will be the thing, the catalyst that allows us to get to these eventual price targets that people expect, $500,000 to $1 million plus per Bitcoin.
Exactly. So let's not be short-sighted. Very exciting times. I wish we could cover the halving, but we're coming to the end of our episode. As you know, I also have a women's empowerment podcast, and we'll actually be sharing this episode there as well, because I feel one of the most important and powerful ways women can empower their lives is by owning their own finances. So that said, could you just share some encouragement to our audience? You know, if there are women watching and they're completely inspired, you know, by everything we talked about, crypto, the opportunity to invest, I would encourage you to come follow me on my crypto channel, which I'll link below. And as I was saying, I'll be explaining things in a simple way. But what could you say in terms of the opportunity for women to get involved in crypto? And what would you say to women just in general? You know, there's going to be like entrepreneurial type women that want to start their own business. They really want to own their own finances. You know, like what would you say to them?
Well, I think that the important thing is that this is true for everybody, male or female, is that this is a once in a lifetime opportunity to create wealth, and right now, don't think about it for the next year or two. You might have missed the biggest opportunity ever. The time is literally now. Yeah. Now, what I will say about women is that our space, even though we've seen the ratio shift from 99.99% men a few years ago to maybe now 98% men. I think that that as a woman, you might have some certain
Powers.
benefits as far as like is what the ability to network, the ability to get to important people easier. Especially when you start going face to face and going to events. Always when there's important events, if there's going to be a big long line of people that want to get in there, but if you're a woman, you can walk straight in, no problem, right? Because you can get in, easier access, because the space needs more diversity, and there's not enough female content creators. There's generally but there's. I feel like that's it. I think it's very fair on every other playing field. Like it's an equal opportunity for everybody across the board, right? But this is a chance to get involved in the greatest wealth transfer that the world has ever seen, and for anybody, it's a chance to get involved and make serious money, because in crypto, it's very, very realistic to be able to multiply your money many, many, many times, when in the stock market, on average, you're getting, maybe 13 to 15% a year gains. Yeah. Whereas in crypto, at this bull run, it would not be uncommon to get 600%, 1,000%, 2,000% gains. Plus, if you pay attention, follow the right channels, learn, and take it seriously, right? And going full-time crypto can take a little bit of encouragement to do. You might have to leave a secure job or work, instead of working, you might have to work your 8-hour job to keep up money to be able to use that to invest. And you might have to work 8 hours a day and then use the other 8 hours a day that you have, instead of doing whatever stuff that you're doing, to go learn, and then use that last 6 to 8 hours of sleep and have no social life, right? But you're either looking at working your ass off super hard for the next 2 years to get yourself to a dramatically different position financially. You might not, because if you're listening to this and it's your first time, your first entrance, you make a lot of mistakes, it's going to happen. But luckily, there's a lot of good educators out there who've been around for a few cycles, who have made the mistakes, like myself, who would try to help people along the way to make less mistakes, but inevitably it's going to happen. Right. So you might not be a millionaire in the next 18 months, but you very well could be. But you're going to be more than likely significantly better position than you will be had you stuck around in your full-time job and you didn't pay attention to what was going on.
Agreed. There definitely is a price to pay. It's not easy. Crypto is alien. It's like you turn the world upside down. It's like alien. It took me 1 year being fully immersed to be able to follow all these conversations, understand what's going on. So I can say it's not very easy, but what I could say is I think that for women, if you don't have a lot of time, I think airdrops are probably the way to go. which I will be doing a video tutorial on like the next hottest airdrop, because it's pretty much just follow these steps. And then if you do all these things, then you'll get deposited these tokens from these new projects. And then those tokens that were airdropped to you often go up in value like quite a bit, and then you just sell. So I think that's probably one of the easiest ways to go for women that are trying to make money without having to fully like get immersed and understand the tech and all these things, especially airdrops. And then secondly, for the women that are in different industries, right? I would say if you're in marketing, you also just message me or join my Telegram community, because marketing is the easiest way to get involved in crypto. There is a learning curve, but pretty much all your skill sets are transferable. That's what I would say. And then thirdly, I would say that if you're in other industries, so you're in medical, you're in history, you are a teacher, blockchain, which is like the fundamental technology behind crypto, is starting to infiltrate and touch all major industries. So it would be a good idea if you're trying to stay ahead of your industry and touch blockchain and crypto, which is the future. It would be a good idea to just do some research and find out like how is blockchain touching your industry, and try to go down that rabbit hole. There's going to be blogs, there's going to be somebody, some project that's working on something related to technology that touches your industry. So anyway, that brings us to the end of our episode. Thank you for joining us.
Thank you, Ben.
And yeah,
Thank you.